Now, most people will agree that when it comes to saving for retirement, the earlier we start, the better. And in a perfect world, most people would probably start saving in their early 20s or no later than their mid 20s. But for whatever reason, some people, myself included, we get off to a late start. But regardless of whether you don't start saving into your mid 30s or maybe your 40s or your 50s, it is never too late to start saving for retirement. So if you have gotten off to a late start, in today's video, we are going to look at a few effective strategies, different ways that you can come up with money for these strategies, as well as a few other tips. But I also would like to add, it also helps to have a financial planner on your side. This is somebody who can take a closer look at your finances and make recommendations based on your unique circumstances. But in the meantime, here are a few tips to get you started. The first thing you want to do is increase your retirement contributions. Now, I know this may seem like a very obvious tip, but it has to be said because when it comes to catching up on your retirement planning, the only way to do this is to save more. So increasing your retirement contributions, whether it's by 1%, 2%, 3% or more, this is an excellent way to start. Now, as of 2020, you can contribute up to $19,500 a year into a 401k. And if you're over age 50, you can put in an additional $6,000 to play catch up. Now, to illustrate how it's not too late, let's say you start saving for retirement at 40 and you max out your contributions. Now, typically with retirement accounts, you can expect a return between 5% and 8% depending on market conditions. Now, for this illustration, we're going to assume a 7% return. If you max out your retirement contributions at age 40, by age 65, you can have a retirement savings of $1.2 million. And this does not even factor in any contributions you may receive from an employee match program. Now, of course, in order to max out your contributions, you would have to contribute over $1,600 a month into your 401k. And for a lot of people, that's probably unrealistic, or you probably have to be making some pretty good money to do that. But even if you can't max out your account, even increasing your contributions by like 1% can make a big difference over like 20 or 30 years. And just to illustrate, let's say you make $50,000 a year and you want to increase your retirement contribution by only 1% or $42 a month. Again, assuming a 7% return, after 25 years, you can have an additional $34,000 in your retirement savings, and that's only with 1%. So now imagine how much more you can have if you were to increase it by 2 or 3%. Now, if you happen to be in a position to max out your 401k and you have income left over to invest, the next thing you want to do is open up an individual retirement account. Now, there are different types of IRAs to choose from, but the most common types are your Roth and your traditional, and the difference between these two is when you get your tax break. With the traditional IRA, your contributions are tax deductible, but withdrawals are subject to income tax. And with a Roth IRA, your contributions are non-tax deductible, but your withdrawals are tax-free. And one good thing about an IRA is that these are not only for employees like a 401k. You can have one whether you are an employee or if you are self-employed. In fact, if you are self-employed, this would probably be one of your primary ways of saving for retirement. But one thing to keep in mind is that in 2020, you can only contribute up to $6,000 to your individual retirement account, or $7,000 if you're age 50 or over. But even though contributing more to a 401k or opening an IRA is an excellent way to play catch up and really build your retirement account, you have to have extra income to do this. And that really raises a question: where is this income coming from? Now, you might not have to do anything as drastic as sell your house, but if you are behind on retirement savings and you're struggling to really increase your contribution, you are going to have to make some tough choices, and it comes to a point where you might have to even rethink your housing situation, because if you are spending too much for housing, that could make it impossible to save money for your future. Now, granted, moving is not going to make sense for everyone, but before completely putting that idea off the table, I suggest really sitting down and crunching the numbers to see if it makes sense to maybe move into something a little bit cheaper, even if it means moving into something a little bit smaller. Because living above our means, it can really complicate our finances and make it very difficult for us to plan for the future. So depending on how much you're paying for rent or housing, in order to save for retirement, you may have to look into getting into something that's going to be several $100s cheaper. That way you can have a little bit more breathing room in your budget. Now, for some people, staying put might make more sense, especially if you're living in an area with a higher cost of living and what you're paying for your rent or your mortgage isn't really going to get any cheaper. But in this situation, one thing you can also do is look at alternative ways to see if maybe you can bring down your housing costs. For example, if you're a single person living alone, maybe you can look into getting a roommate, somebody who can share half the expenses with you. Or maybe if you have adult children living in the house, you can charge them rent. Another thing worth considering is refinancing your mortgage, because if you are able to qualify for a lower interest rate, that could potentially reduce your monthly payment, which is going to give you a little bit more wiggle room in your budget. If you can save hundreds of dollars by refinancing your mortgage, you could take that savings and put it into your IRA every month. Or refinancing your mortgage can help compensate for any income you lose by increasing your retirement contributions at work. Now, looking for ways to save money on the housing side, that is a great start, and it makes sense because for a lot of people, housing is your biggest expense. But as I said earlier in the video, when you are behind on retirement savings and you're trying to catch up, you have to make some tough choices. So while it's good to spend less on the housing side, don't stop there. In order to get where you need to be financially, you have to cut spending in other areas too. And as you go through your expenses and really evaluate where your money's going, make a commitment to get rid of, or at the very least, reduce spending in at least 5 different areas. If you can do more, great. Because at this point in life, you really don't have the luxury to be spending so much money on extras when you're not preparing for the future. Because I agree, we have to live, we have to have fun. I feel that life is about balance. But at the same time, you should not have so much fun at the expense of planning for the future. If you have 10 subscription services, maybe you can cut that down to maybe 3 or 5. And if you have cable, be honest, do you watch all of those stations? Because if you don't, chances are you could probably downgrade to a smaller package, which would be just as adequate for your needs, but yet save you a ton of money. Or if you hardly ever watch TV, it might make sense to just get rid of it altogether. Basically, you just want to take a look at every category that you're spending money in and see if there is a way that you can cut back. Because if you are able to reduce how much you spend on recreation and entertainment by half, if you can negotiate your insurance rates, or maybe you can get better rates for your cable company, the savings, it will add up. And before you know it, you could easily have an extra $200 to $250 in your pocket every month, which can go towards saving for retirement. Another thing you can do is don't save for a kid's education. Now, I know this piece of advice might go against what some people believe and feel, and I totally get it. A lot of parents don't want their kids to have to leave school with tens of thousands of dollars of debt. But if you are approaching a certain age and you don't have anything saved up for retirement, or you have very little saved up, you really have to rethink your priorities. Because the reality is there are a lot of ways to pay for college. There are loans, there are grants, there are work-study programs, there are scholarships. There is no loan or grant to cover retirement. Now, if you can afford to save for both, putting money aside for a kid's education and saving for retirement, great, do both. But if you have to choose one over the other, many financial experts will tell you to always put retirement planning first. Another thing that can help you play catch up is to find ways to increase your income. If you are able to make an extra $500 to $600 a month, that can be a huge difference in the long run. And of course, there are several ways to earn extra money. Now, some people might look into getting a part-time job, and that is definitely an option. With a part-time job, you can start working quickly and you can start earning money as soon as possible. However, along with starting a part-time job, I also recommend maybe looking into some type of side hustle or business, something that you can do on your own, and possibly something that you can even earn passive income with. Now, the thing about starting a business, of course, is that the income is not always immediate. You have to first build a business, get clients, clientele. And if you're interested in earning passive income, you have to do a lot of work in the beginning before you're able to earn money. But the reason why I really push the whole idea of maybe starting your own business is because it's an opportunity where you can really work at your own pace, and a lot of times you can even make more money. And if it's something where you're able to earn passive income, I mean, you can earn money even in your sleep. And as someone who's trying to play catch up and save for retirement, the ability to earn more money is really going to help you get to your goal faster. And one cool thing about a hustle is that if the business really takes off and it does well, there's even an opportunity for you to continue earning income later in life, which can then supplement anything that you're getting from your retirement income. Another tip when playing catch up is to stay healthy and fit. Now you might be wondering, what in the world does this have to do with saving for retirement and playing catch up? But hear me out. Getting older can sometimes bring on new health problems, and granted, some health problems are unavoidable. It doesn't matter what you do, you might still get sick. But a healthy lifestyle can reduce the risk of certain diseases and illnesses. And if you're able to reduce your healthcare costs, you can then in turn save money. And of course, the more money you save, the more opportunity there is to save for retirement. So get regular screenings and physicals, stay active, eat a healthy, balanced diet. And one benefit of staying healthy is that it may even allow you to work longer. And by working longer, you could possibly delay retirement, which then allows your retirement savings to grow a few more years. It's also important that you don't take on any new debt if possible. This is so important at this stage in life because taking on new debt, it can really derail your plans, because that means you'll have less money available for savings, and it is going to push you further away from hitting your retirement goals. So if you can, delay getting any new car loans or any new debt for as long as possible. Now, if you do have to finance something in the future, say like a car, do everything you possibly can to minimize this debt. And this can involve buying something a little cheaper, or even making sure that your credit remains good. This way you're able to qualify for a lower interest rate, which can also lower your monthly payment. And if you have existing debt, definitely come up with a strategy to get rid of it. In fact, you can even use a lot of the earlier suggestions that I gave, because debt, it really robs you of any opportunity to save money. But once the balances are gone, that's even more money that you can allocate to growing your retirement fund. So those are my strategies on how to play catch up if your retirement savings has gotten off to a late start. Now, these are only a few suggestions. Of course, there are so many different ways to play catch up. So if you have any ideas, definitely comment below and let us know. Also on this channel, we talk a lot about money, different ways that you can improve your entire financial outlook. So if you like videos like this and you want to see more, also hit the subscribe button before you leave. I post every weekend and sometimes during the week. So thank you again for watching, and I'll see you guys in a few days.